Stop before you say, I am a startup founder, and learn to recognize that there is a difference between being self employed, a small to medium business entrepreneur, and a startup founder. How do you tell the difference? And what do you do from there to navigate? In this video, I'm going to be talking about precisely this because I see many people who claim to be startup founders. I'm not saying this is you, and this is not an indictment. This is not a judgment. This is simply a technical lesson to help you navigate how to become successful in each. We're going to be talking about this. This is part of my ongoing series I'm calling the Founder Journey, where I go through every step that you should be taking to become a successful startup founder. In other words, I want you to be a successful startup founder, but at the same time, there are many people who say they're founders, they're really self-employed or really small and medium business entrepreneurs, and they should be happy doing so, and they'll be incredibly successful. All three of these paths will lead to incredible success, which I'll talk about in just a moment. But before we continue, I want to encourage you. Self-awareness and taking this journey and taking everything one step at a time. You know, it's the old adage, the proverb, a journey of 1,000 miles starts one step at a time, right? So take this next step. In the previous lesson, I talked about, don't start a startup. I tried to discourage you from starting a startup. And, I got some interesting quote backlash from it. Some people there were like thinking to myself, gosh, Ed, you're so discouraging, or you're being pessimistic. Well, there's a reason I do that, because it's the same thing when someone talks to me about, should I get married? I'm just like, you should start in the position of no, I shouldn't get married, and then figure out all the reasons you shouldn't, and then address each one so that you can be successfully married, right? So you can become a successful startup founder. Want you to start off in that I'm coming in eyes wide open. And I'm not doing this to be a negative Natty or Nelly or Nilly or something like that. I'm trying to open your eyes for the challenges, because being a startup is fundamentally hard. A founder is especially hard. And being self-employed or small business entrepreneur, while they're hard to various degrees, you can be just successful and might align to your life a little better. All right, let's talk. What is being self-employed? Self-employed is very simple. All right. And, if you look at the book, The E-Myth, there's lots of explanations how some people just aren't entrepreneurs. What you've done for yourself is you've bought yourself a job. That's what you've done, right? I need a job, self-employed. This might be a side hustle. A lot of times gig workers fall into self-employed. You're driving Uber or different things like that. And that's totally great. You bought yourself a job, right? You're just self-employed and you're working gig economy. Maybe you're doing some side hustles or different things like that, and you're self-employed. The key word is self, because usually there's only one person involved, and you're self-employed. You might be using other services, or you might have someone assist you, but you're not really running a company. You're self-employed. This is for individuals who really love doing the job, but don't love running the company, all the other aspects. Many entrepreneurs start a company and say, I really loved doing this part of the company, like the service or creating the product or selling the product even, but they don't like all the other stuff like employees, taxes, infrastructure, administration, all that stuff. Well, maybe you're just going to be self-employed and you can be wildly successful. All you got to do is raise your hourly rate, or, be self-employed and start developing opportunities where you can take the money from driving Uber or selling this and then invest it in other things like I do, okay, in terms of stocks and a portfolio, investment portfolio, property, other forms of passive income, which takes you to becoming an entrepreneur, by the way. But you're self-employed and you're just generating cash. You bought yourself a job. That's being self-employed. Nothing wrong with that, right? And in many ways, you can be self-employed in a workplace as well. You're buying yourself in a job. You went to school, pay for education, you have a job, but you're gonna be self-employed. You're like, I'm working for me, so I make as much money in my job as possible, and then I'm gonna put it into my investments or savings and different things. Or maybe you're just gonna go get a side hustle, who knows, but absolutely great. All right. A lot of people who are quiet quitting, or you find these people like moonlighting and doing multiple jobs, they're self-employed, right? Totally great. Next, what is a small business entrepreneur? All right. Well, here's the key when it comes to small business entrepreneur. You're developing an asset, okay? Asset that pays. One of the biggest things that you can think about in terms of being a small business entrepreneur, other than the fact that you own your own company and you're in control, is, time. Small business entrepreneurs, okay, are building assets, and they're building assets that pay them and separate their time from money. They're not trading dollars for hours. You might be in a company and you're like, I'm the one doing all the delivery, and it's my time that determines the hours, or my hours, the time that I put in creates the hours that creates the revenue. Well, you're not really an entrepreneur. You're kind of a self-employed with just, a bigger company, right? You're self-employed, but you have more people who might be self-employed around you. What happens is, if you are trying to become an entrepreneur and you are building a business, you're trying to divest yourself from the time. And this is where going to the E-Myth and that book, E-Myth, is really great, because it talks about how many people think they're entrepreneurs, but they're really just, self-employed. They're really just, they're just technicians, working their job. They're not running a company. It's the difference between working on your business and in your business, right? When you're an entrepreneur, you learn to work on your business. You develop as an asset so it continues to make money for you. And again, you want to divest yourself from the time. That leads to Start Founder. The Start Founder has a whole bunch of different parameters, okay? And I'm talking about pure startup founder, and the word startup. Like, you can start up a company, you can be a founder of a small business, but a startup founder, the type that you see, like the Ubers, the Airbnbs, the TikToks, all those things that you see out in the marketplace, and, they go public and, what have you, those are startups, are different than other types of companies that also go public, right? Most of the time, startups are the ones that go on this crazy growth and they get all the investment. And that's one of the key things. Is the reason you want to separate this out is because the type of investors you're going to bring in. So many people are self-employed or small business entrepreneurs, and they go in and they say, why isn't this tech investor interested? I'm a startup. You're not really, and you don't fit into that investment thesis, and you're not going to get that investment. Many instances I see Shark Tank. I can, cut it down with a knife when, people come in and they say, I've developed this product and I'm selling this product, or, I import this, or, we make this type of food. They're small business entrepreneurs. And Shark Tank, a lot of people like to invest in small and medium businesses. There are private equity companies that are not interested in startups whatsoever. They don't want to invest in the Ubers and, all the different, the coin bases and all the other companies, Amazons. They don't want to invest in those. They actually want to invest in stray mom and pop shop small businesses. I was talking to a founder the other day, and he wants to buy a whole bunch of other small businesses in his space and basically create a private equity fund and roll them up together, make them efficient, and put that together. Is he a startup founder? No, he's not. I told him. He asked me, should I be raising funds like a startup? What's seed, pre-seed, all that stuff. I'm like, you're not raising money as a startup founder. You're raising money as a small to medium business. Hopefully you become a really big enterprise, but it's a completely different approach. So it's important to understand there's a delineation, especially when it comes to investment and how you use your capital inside the company. Well, what's the difference? How do we decide? Let's continue here. Okay. I've developed this little handy chart for you. Okay. On the bottom, you see self-employed, small business entrepreneur, startup founder. All right. On the left is TAM, tech, team traction. TAM is the size of the market. Tech is how innovative your technology is. Are you using stuff off the shelf, or, what have you? What's the purpose of your tech? The team, the type of team that you need, the size of team that you need, etc., and the traction that you are looking for. And what happens is when you are here and you're starting at the bottom, it goes like this, right? This is the curve. I can't go all the way to the top, right? Because my picture's in the way. So that's the curve of what happens. All right. So just look, this is like a chart to explain. And maybe you're going to find yourself, okay, maybe I'm here. Are you here? Or, are you here? These are the questions you want to ask yourself. And again, I can't iterate this enough. It's fine wherever you are. This is not success. This is not the graph of success or the money that you're going to make. In fact, it could be inversely proportional that, you could argue that, it kind of goes like this. In terms of percentage chance of success, because startups fail very, very fast, right? Startups fail, they fail at a faster rate than small businesses, right? Small businesses are risky enough as it is. Startups, whoo, really risky. All right. So how do we know the difference? Well, in self-employed, when it comes to TAM for a startup, it needs to be really big. So, for example, in TAM, you can have a local TAM here, but here, this needs to be huge, massive TAM. It needs to be in the billions of dollars. In other words, the market has to be so big, your company is going to be worth billions. When you're self-employed, I'm like, no, I just need like a few clients to, pay me for this side gig, or I just need 10 clients a month and I'm going to be okay if I'm self-employed, right? You're on Upwork or all the different things. You just need a certain amount of local clients. If you're an Uber driver, you just need the local TAM. That's what happens. Now, when it comes to tech, when you're self-employed, you use tech such as off the shelf, right? So off the shelf here, right? And then what happens is when you're a small business entrepreneur, okay, you're using tech for efficiency, right? So you'll start to use different tech. Maybe you're building your own software solution, right? But to make your own operations more efficient and more profitable, et cetera. And then when you're a startup founder, you're using technology to disrupt. And what happens is everything for scale. So technology is used. The software, the tech is the product, whether it's deep tech, something that hasn't been seen there before, and you're disrupting a massive market, a market of potentially worth billions with something so new and innovative that people haven't seen before, that, like crypto, like blockchain, like Bitcoin. No one saw that before, and it's a global phenomenon, right? That's a startup. Whereas if you're self-employed, guess what? I use my phone, right? And I don't need to disrupt anything. I just use it for me. But for small business entrepreneur, you're using tech and you're trying to find a different technology stack to make your business more efficient. So you can imagine where the investment has to go, right? If you are disrupting yourself, like, one time, one of my startups was in the SaaS space for employee engagement. I was a consultant. I was working. I created that technology to completely replace myself, right? Not to make myself more efficient or anything like that, to completely replace people like me, disrupting at scale so I could reach millions and millions of employees, right? If I was self-employed, a small business, self-employed, I'm a single contractor. If I'm self-employed, guess what? I might use software for accounting and software for client, management, and might use Salesforce, might even customize Salesforce a little bit, but it's helped me to develop efficiency. Now, the team, when it comes to team, when you're self-employed, you can be solo, right? And a little bit of help. Okay. Now, the team here, when you're a small business, it depends, right? So different small business, you can have, I think it's like under 300 employees are still considered a medium enterprise or something like that. But, employees are there for, production and, what have you. When you are a team, like right here, you have employees. When it comes to a team inside a startup, they're looking for something called domain expertise. Okay. So here's the thing. All right, solo, self-employed, you just have to be able to do your own thing. Great. When you have small business entrepreneurs, they're trying to hire employees to help them with production capacity, operational efficiencies, right? And here's the thing, you don't need the world-renowned expert, right? If I'm running a small business, and let's say I'm running an accounting firm, I don't need the person who wrote the book on accounting working for me. In fact, that's probably not going to work. I'm gonna have to charge my clients, etc. I need people who fit into my operational model, right? When it comes to being a startup founder, the talent war is huge because if you're working on a solution for a massive billion-dollar problem that nobody's seen before, nobody tried before, etc., you need experts, right? So in the beginning, investors are going to look, does this team have the expertise? You may be someone who's really good, but at investors are going to look at you. And this is what we do. We look at the founder and say, can we see this person running a 3,000 person company, or at least a 300-person company, and making it past that small business, small and medium enterprise, level? If they don't have the executive presence, we don't see them, or we don't think they have the influence to bring on superstars on their team. Well, there's a risk in that investment. Most likely, it's not, the chances of that founder receiving investment is, low, like it drops. So that's the reason founders have to be very formidable. They have to be, relentless, resourceful, and formidable founders that believe they can change the world and have this kind of swagger and this leadership quality about them. You can have the founder making the coolest stuff in the world, and it's like, we just don't see them being able to run a company. They're just really good at hacking away on their computer, while chances of that investment go down. But that's what co-founders are for. So if you see, the two together and they brought in someone who can do sales and who's out there, well, that just helps in terms of the investment. All right. So that's where the team comes. Now, traction. This is going to be a huge one. Let me see if I can pull out another color here to really highlight what we're talking about here. Okay. If you look, okay, it's 1%, 10%, and then here is 10x. All right. I can't stress this enough. All right. This is the mindset that you ought to be thinking about. In terms of self-employed, you just want to be working on 1% at a time. Right. When you're self-employed, this is what I like to say. It's the whole concept of incremental improvements. If you just improve everything by 1% here and there, eventually those little 1% add up and you start improving, right? Just get 1% of productivity increase, every single time. Try and get 1% added on to your billing, or 1% efficiencies. Take it in baby steps so that you manage your capital, and you're not going out there and YOLOing your life away. Be self-employed and, say, okay, if I can increase my income by 1% and decrease my expenses by 1%, right? And then I can sock, now you got 2%, but the 1% exponentially adds to the other 1%. And then I can sock that away and make a little 1%, a little more on my investment portfolio. Then you got 3% exponentially. They lead into each other and everything starts to flow. This is what I tell self-employed people. Just take the journey of incremental improvements, go 1% at a time. Don't stress yourself out. When it comes to small business, think 10%. All right. 10%. If we can just increase our revenues 10% per year, decrease expenses by 10%, get 10% more of the, our local market share, and, start expanding from there, manage in 10% increments, you're going to be just fine. In fact, you have a way better chance of success if you stayed on the slow growth path. I know a founder, okay, small business entrepreneur founder, who has been working for 20 years and has gotten, it's still under $10 million of revenue, has grown steady, never had to lay off an employee, steady Eddie. And guess what? They got millions of dollars in the bank, right? And they just, manage it. Okay. They're not interested in building this massive thing. I know many founders who went out and they got venture capital and they burnt out, and they come back and say, you know what? I want to do this, but I don't want the venture capital. Right. And I say, well, you just, pick a 10% growth business, small and medium enterprise. You're going to be just fine. right? They don't need technology. They don't need disruption. They don't need mounds of capital, because if you're putting out an app and you're putting out something disrupting technology out there, you're going to need that capital. And guess what? That's the reason they call it venture capital. Sometimes call it vulture capital, because, they need to get those returns. Not, if you're thinking 10% and you go to a startup investor, they're like, no, that's not an interesting thing. I've had my investment associates, my investors, and the analysts and the scouts, they tell me, Ed, that doesn't sound like a 10x idea. It's a 10% idea. And I go, yeah, it is. Small business entrepreneur. Nothing wrong with that. Do it. Okay. In fact, that's the world that I live in right now. Even though I got startups in my portfolio, but many of them become just solid businesses. And I'm just trying to increase 10%, across the board every year. Startups need to go 10x. It can't be 10%. All right. And let's look at it from an investment perspective. Someone gives you $100,000 for your small to medium business. If you return them 10% every year, they're going to be super happy. Super, super happy. It's just going to keep growing exponentially. It's going to be great. But because many times, you think about it, 8% of small businesses, shut down in 5 years, something like that. 10% return, I'm happy. In fact, the best hedge fund, on average, in the heyday, I think gave like 14 to 16% return, type thing. If you got small business, 10% return, I'm happy with it. Now, some of these small businesses will grow and get acquired, and there's a big exit, at the end. But 10% a year in dividends, man, I'm super happy, right? My dividend portfolio, I get what, 1, 2, 3% returns. Maybe if I find the right one, they're giving me 4.5 points per year. And that's in the stock market, right? So go 10%. It is the return. But when you invest in a startup, if I invest, $1 million, I'm looking for 10x return. And this is because, venture capital funds, micro VCs, family offices, funds, okay, all have a portfolio of investments, and most of them are going to fail. So 90% of startups fail. Well, guess what? You need to go 10x on one venture to cover all, the rest 90%. Now, hopefully the other break even and you're able to give returns. But I'm going to challenge you this. Go Google what the returns of startup capital, startup backed funds has been in 2022. Okay. Look, okay. It was really nice leading up to it, 2020, 2021, but 2022, there is blood all over the place, blood in the streets, right? But people aren't deterred, they'll still invest in startups because the asymmetric upside to be able to go 10x, like if they invest $100,000 and they lose $100,000, they're like, okay, if they invested in $100,000 in a small to medium business, they're going to lose $100,000. Okay. But in a small and medium business, that goes really well. Maybe they get, 10% return, 50% return, maybe 100% return. They 2x their capital. That's not going to cut it because of all the big startups that fail. They need that startup to go 10x. They need it. And the potential loss, this is where the asymmetric upside happens, is $100,000, but the gain is bang, 10x, $1 million. Or if they put in $1 million, the loss is $1 million, but the gain is $10 million. That's the reason some entrepreneurs love investing in startups, because the thrill of that asymmetric upside is totally worth it. There you have it. That's the breakdown. So the question becomes, which one do you want to be? And there are plenty of resources. Now, I happen to work in all of them, but it was startups.com. Obviously, we're here, right? But if you really think about it, what are the benefits? Let me talk you into some of these. Self-employed, like I said, just go get a job and then go work for yourself. Go get a side hustle and do all these things, make some money and sock it away. And, there's so many better ways to do this, and enjoy your life, right? Maybe you save enough to become a small business entrepreneur eventually. If you're a small business entrepreneur, yeah, just focus on the 10% growth, and maybe that's you, and you're not trying to sell for billions of dollars or go public. There are small business entrepreneurs that are making $10 to $20 million a year, their company, and they're being offered, $30, $40, $50 million for these companies. That's really great. If you bootstrap and you don't have, any investors to deal with that want 10x, well, putting $10 million in your bank account, you're set for life. Don't worry about it. Right. But other people, if you've got a whole bunch of money, like I know founders who have taken on VC and their companies have ballooned to hundreds of $1 millions, and they only are able to put the same $10 million in their pocket. Well, what's the reason for that? Well, investors got to take their cut, and the more capital you take, the less of the company that you're going to own. So they do it because they love the startup, because they've thought through. They have the TAM, the tech, the team, and the traction, and they want to go 10x on this thing, and they have this big vision, and they can't help it. They need to do a startup, right? And I understand, completely understand. But think through these other things, and maybe after this video, you're like, I'm going to save myself the headache and the pain, and I'm just going to become a small business entrepreneur. Kudos to you. Tons of resources for that. I know many startups that turn into small businesses. I also know many small businesses that turn into startups, right? And I know many self-employed people who save up enough money to become a founder, later on. I totally get it. Where are you on this? Understand the difference. There you have it. Join us at startups.com if you want to have office hours and talk to other founders in this. I'm there all the time, lead advisor. This has been part of our ongoing founder journey series. If you have any feedback, comments, questions, let me know. It always helps me plan these other videos. I appreciate anytime someone provides some feedback, especially if you're in the startups.com community. Appreciate you all. Love you all. Let's work together. Let's do this. Let's keep it going. Thank you for watching, and I look forward to seeing you in the next video.